Welcome to the Trading Zone. I'm Joe Teague, Portfolio Manager at Equity Armor Investments. Make sure to check me out every Monday here at 10 Eastern Time. We're talking Trading Zone. Brian Stutland, usually with me, is having technical difficulties. Sorry for the delay this morning. It'll just be me this morning talking to y'all. So make sure to say hi in the chat. I'll check it out. If you got any questions, make sure to throw them in there. Any charts you want me to look at? Happy to do so. Just throw them in there. It's been a busy morning already. Market started off on the right note, kind of flipping around here, maybe some weak home builder sentiment, but broadly speaking, a nice morning to get going here, getting some good risk on, which is really critical for the market. With all of that last week, I'm going to get into that in a big way. We had a huge sentiment shift coming on Friday here, so want to check in with that. Maybe check in with you guys, see how everyone is feeling. What is your sentiment? Definitely want to see that as we play out here. Let me get myself centered here on the screen. Boy, that is a big me. Okay, I'll get the show started here. Oh, thank you. Okay, I'll get the show started here. Thanks, everyone, again for joining in. Really happy to see you here. Really happy to talk markets here. We're going to be talking NVDA. If you stick around to the end, I'll be talking to NVIDIA. I got a trade for y'all on NVIDIA and what to do potentially with a gamma squeeze. I think the market could be looking at one. It's just one possibility, certainly possible to the other way, but I think an upward gamma squeeze is certainly possible with all the news we got coming out this week. So what's going on in the market? So there has been the consumer softening. It's definitely a big story. People might be a little worried about the future. We know consumer sentiment is lower. We're seeing some sales miss here. So there is some concerns. We saw Costco after their earnings had a big negative print. So yeah, we're not a negative print on the earnings, but a big negative day for Costco pulling back from over 1,000 back to the low 900. So it's big turnaround here in the consumer. This is driving the economy. This is really crucial for everything in the GDP. So retail sales going down, that's not good for the economy. People might be worried about their future, worried about losing their job, etc. So they might do a little penny pinching, and this just has a way of cascading into other things, and job losses, beget job losses, and we know the story. So I'll be watching that closely, just the economy in general. But on the flip side, we're seeing a nice bump out of China. Now, this might be due to people rushing and getting their Chinese goods before the tariffs take effect. So that's one possibility. We know China is trying to boost their economy to counteract these tariffs too. So this could be another interesting story to follow. Maybe growth somewhere in the world could be good around the world, even if we do have all these tariffs. So we will be watching that. And we also just have this nonstop talk about a ceasefire. That would be very good, in my opinion. Obviously, we want to see the deaths and the killing stop. So we be very good to see a ceasefire and ultimately a long-term truce. Just stability around the world without the fighting would just be very, very, very good. We'll see how it plays out. It might take a few weeks to get this all to come together. So nothing is guaranteed. Of course, there is other wars around the world. We know that to be the case. Maybe these are kind of tied together. We know Russia and Iran have very close ties. Maybe there's something going on behind the scenes there. We'll see. Also, wars in the Middle East kind of heating up over the weekend. We had attacks in Yemen on the Houthis in the Red Sea. So not something we got to be careful with. The Red Sea shipping zone is very critical. I think 30% of global trade goes through that corridor. So it's very important to make sure that it's safe and secure. And if it is, I think that would be a big boon for the U.S. economy, European economy, all economies around the world. We did get the spending bill passed last week. So that was good news. I think that was the big relief rally on Friday that we got just finally through that little hiccup. I think we really still are holding our breath that we want to see the deregulation. We want to see the tax cuts. When are they coming in? Maybe this will make it a little bit easier to do so. given that the budget bill will be an omnibus bill. Won't need 60 votes anyways, even though they got 60 votes for this one through the Senate. So anyways, that's the recap of what's going on. We're gonna have a big week this week, so let's jump into it. This is the Trading Zone. I'm Joe Tigay. On Wednesday, we know it. That's gonna be the big day of the week. That's gonna be the Fed meeting. I think we're all going to be very interested as to what they have to say. Will we be cutting rates? Is it because inflation is lower, or is it because the economy is softening? I think those are two very different possibilities there. Hopefully, the economy is kind of flatlining and not necessarily soft lining, and inflation is coming down, and rates can come down too, and that can kind of give a little boost to a softening economy, not a like really collapsing economy. That's really the soft landing that we all are looking for. We also have seen volatility come down in a big way. I always track this. Brandon and I always look at this every week. This is the SKU index, measures the price of the S&P 500 puts, 25 delta puts versus the S&P 500 25 delta calls. I think this is a leading indicator. Very nice action here last week. Yes, we got this little peak up finally here. I think that kind of was a little bit of capitulation. People jumping in, buying puts, racing puts. I think that was just finally enough put buying, and then the market was able to turn around right when it should. Here is the VIX futures curve this morning, way down from where we were last week. Of course, the VIX itself is way down. The front month is way down. Just everything is much lower, but we still are in this backwardation formation where you get the spot higher than the front and the front higher than the second. I think normally, if we can normalize it, we get into this formation. So we'll be waiting for that. I think the market would like to see that, but until we do, I think it's still kind of iffy here for stocks, to say the least. This is my stubbornly favorite S&P 500 chart, which we looked at this all last year. This was a trend line, ascending trend line, led into an either more escalated trend line. We were unable to stay above that one, which kind of where the market stalled out. And now we kind of rolled over, and we're finding that this old trend line might become support here. So that is good news for me. Now, we're going to get into this a little bit later with the gamma squeeze, but this 200-day moving average right here is really important for me, okay? So I think a lot of people are just looking at this and saying, hey, we're probably just going to go kiss that 200-day moving average. And then from there, it's really crucial. Is it just going to be a bounce and then retreat and test these lows? Or is it going to be a gamma squeeze, race through to the upside? On the short term, very good news here. Just breaking out of this downward trend line. This is very well-defined trend line here in the NASDAQ. Just getting above here, and now we got some potential here to retrace some of these losses. Of course, the NASDAQ itself, 200-day moving average looks very similar to the S&P 500. We're well below that here. Another possibility here to go and touch this, tag this 200-day moving average again. What happens then? We touch 200-day moving average. Great. Are we going to bounce up to the 50-day, or are we going to, make a new low? That's going to be a critical spot for me. Most of the sell-off, as we know, came from momentum names, NVDA and Tesla, to name a few. Boy, this was just a massive retracement here in Tesla. Just unreal unwinding. We know the story. Just 50% retracement. This is very interesting. I think it kind of goes with the consumer sentiment that we've seen. This is a very polarizing stock, but I think we need to put the polarization aside and just look at the fundamentals here. Are they selling cars? Are they projected to sell more cars? Are they innovating anything new? We're going to have driverless cars, the battery packs, et cetera, et cetera. So we'll be watching all that. Again, this is a very high-flying tech company. It's not unusual to see retracements like this in this company. We had the PE at the end of the year. It was just astronomical. It just didn't make sense there. I think there was a lot of hype buying. I think it's now back down to earth where these are levels where it was last year. So this is normal levels here. I think this is reasonable. I think what we do from here is, of course, very important. We want to see stabilization here, but it all depends on the product, of course. NVIDIA, very similar story here. Big retracement in short term, but of course, it's turning around here. It had a nice little rebound here last week. We'll see if this lasts. I'll be talking about this at the very end of the show. Now, interesting though, while all this was happening, we had this big risk off trade, massively risk off. We also saw the dollar just plummeting at the same time. So that was a fascinating dichotomy for me. It just was absolutely into maybe gold was the only place people were hiding their money, but there was really nowhere to hide throughout this whole exchange. People did not want to own dollars, did not want to own stocks or bonds or just anything. It was just nowhere to hide any money at all. Not even Bitcoin, of course. But usually when you see the dollar fall off, risk assets do quite well. Things priced in dollars, you need more dollars to buy them. So it was interesting to see stocks lower at the same time as the dollar lower. That was just really kind of a very, very, very cautious move by the market. We'll see if what turns out to be playing out. If the dollar was weakening, maybe just for geopolitical reasons or any other reason, that would naturally lend to higher asset prices in the stock market. So we'll see. Maybe we'll have a tailwind into this week. Of course, we have expiration week coming this week. We also have just massive bearish sentiment. This is extraordinarily high. It's been that way for a few weeks now, where we're just seeing, this goes back years and years, like to see this high of bearishness. So it might be a sign that people are over exuberant to the bearish side, and the contrarian sentiment, of course, is to the opposite side. The pain trade is just to lose for all these puts to evaporate into zero while the market races higher. We'll see if that materializes, but apparently the pain right now is getting put to the bearish side for sure. And again, we have this sentiment way bearish. We have this lower dollar, just kind of a sign, of the risks. Of course, we still got high volatility. There's no question about that. But let's just take a look at NVIDIA one last time into this expiration week. I'll be looking at NVIDIA call spread, 125, 130 call spread, just looking at playing the momentum higher. This 125 area into the 130 area is around where the 200-day moving average is. So I'm not really looking for it to race through the 200-day moving average. If it did, that would be great for the trade. Of course, it would have been better to just buy the 125 alone, but it gets a lot cheaper to sell that 130 call spread. This lowers my break even down to 126.45, so I can be profitable quicker. I think the 125 call is going to be about 275, and the 130 about 1.25. So I obviously am making it a lot cheaper by selling that call spread. But if I wanted just a little bit more upside, if we're going to race through this 130 on this week alone, I don't need to sell that call. But I'm leaning towards selling that call, just increasing my probability, of course, here to the upside, as NVIDIA absolutely has plenty of potential upside up to 150, but I'm not really looking for it to bounce way through this 200-day moving average. Now, if you're looking at this chart a little closer, you also got this 50-day moving average coming down into this 200-day moving average. So I'm more leaning on the side of a short-term bounce just into this 200-day moving average, right, that area right there, and then we'll see from there. But the gamma squeeze certainly is there. When you get these moving averages, especially like in the S&P 500, there's a lot of positioning that goes into that. a lot of positioning goes into, there's fund managers that get short or get flat stocks below the 200-day moving average are going to buy stocks back if it goes above the 200-day moving average. Same thing with the NASDAQ. So that's one component of the gamma squeeze. You also have option positioning too, which there's a lot of call activity at that level. So, and even at this level. So I think this upside potential gamma squeeze is absolutely there. We know the bearish sentiment is there. I think there'll be a lot of covering if we do trade decisively over that 200-day moving average. So I'll be watching that. I think if that is to happen, I think the bull scenario probably is something where it trades up to the 50-day moving average, which is now declining, comes back down, and then finds support at that 200-day moving average. That's kind of where I like to reinitiate longs here and that like retest, and then we'll see from there. So that's kind of my hope for the market, my hope for NVDA. Of course, I'm obviously prepared for it to not work out. That's why I'm using options and not stocks anyways. So again, just my 2 cents. If you have a different opinion, let me know. I'd happy to talk it through with you. It's just something that I see, and I think is a good chance that I will be happy at the end. Anyways, it's tricky to talk for 30 minutes here with no one to bounce it off to, but it's been a fun show. It's been a good week so far. Really excited about the Fed meeting. Hopefully, they can breathe some life back into this stock market. Hopefully, we get good resolutions on all the wars going on around the world, and maybe some good news in tariffs for once instead of bad news. Always that would be good too. On the flip side, if that doesn't happen, hey, I'm here for that too. I'm ready for the downside to continue at any given point. I just think right now a little oversold. Short-term bounce, 200-day moving average would be appropriate. Thanks for tuning in this week. I am Joe Teague of Equity Armor Investments. Make sure to catch me every week, Monday at 10 Eastern.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.